Today, we saw the NASDAQ rallying up towards that trend line. And when the CPI report came out this morning, the bears were absolutely getting squeezed as the market continued to rally higher. Now, the question is, will the squeeze end tomorrow? Now, we come over and look at the fear and greed index. For all the movement we had out there in the markets today, the fear and greed index still on the lower end of fear. Then we look at how the indices fared across the board. The Dow was up 703 points. The NASDAQ was up 466 points. S&P 500 up 107 points. Russell 2000 up 4.35. But look at advancing issues versus declining. There was 81.5% of issues advancing on the day. And when we come over and look at the sectors across the board, every single sector was in the green. No one was left out. And when we come over and look at the CPI data that came out today that actually stoked that short squeeze, notice the core CPI month over month came in at 0.2 versus a forecast of 0.3, previous reading 0.3. However, look at the CPI month over month. Came in at 0.4, forecasted 0.4, but previously 0.3. So that means on a month over month basis, the CPI is still rising. Then we come over and look at the CPI year over year. Came in at 2.9, forecasted 2.9, but previously 2.7. So I don't know why everybody is cheering the news out there today, because on the face value, the CPI report simply was not that good. Now, as we talk about inflation, Janet Yellen says we could have kept inflation stable if it basically let 15 million people go out of work. Now, let me know in the comment section down below, do you think the Fed did the right thing by letting inflation get out of control? Or should the Fed have allowed the unemployment rate to creep up? Let me know your thoughts in the comment section down below. Now, today, if we come over and look at the dollar index real quick, dollar index forming a hammer candle, and we were talking about this on the live stream. We can see at 8:30 when that news was released, big drop out here on the dollar index, only to come rocketing right back up and basically undo the whole entire move. However, the stock market lately has been freaking out about the yields, and look at the yields today. Yields absolutely falling off a cliff with a big, nasty red candle out here today. Now, when we look at the precious metal gold back on the move back up. And I got to be honest with you, we already had one rejection off the 78.6. We come up here again. It's probably going to break. We're probably going to see this recent swing high being taken out. Then we're probably likely going to see gold make it another new all-time high. We come over and take a look at crude oil smashing through our ABC target right up here at 79.69. Crude oil having a massive day on the way up. Crude oil up almost 4% on the session. But then as we jump back over and look at the S&P 500, it is getting very close to this declining trend line. And today we breached the 61.8 and we are very close towards that 78.6 Fibonacci retracement level. Now, when we look at this on the 5-minute chart, big, massive gap on the way up. Now, if you notice on the 4-hour chart, as we're coming up towards that trend line, the MACD indicator still has not crossed to the upside. We look out here on the 4-hour chart, we finally got across to the MACD lines, but right at a point where we're coming up right near that declining trend line. This is going to be a make or break area for the markets. Then we come over and look at the 30-minute chart, a big, massive gap up this morning. However, look out here on the MACD indicator, starting to roll over. Do we potentially tomorrow come down, test out gap support, maybe even come all the way back down and fill the gap? Because tomorrow we do have some more economic news at 8:30 a.m. We have core retail sales month over month coming out. We have retail sales. We have the weekly unemployment claims. And we also have the Philly Fed Manufacturing Index, followed by some FOMC members speaking throughout the day. So tomorrow morning, we do have the economic news that could get the market cascading lower. However, when we come over and look at the futures markets real quick, look out here on the 4-hour chart. Could this be nothing more than a hanging man candle? We still need to see confirmation of that. Now, confirmation would come in the fact if we start breaking down below the low of the candle. And I really want to turn your guys' attention to this huge minus development area. And we were talking about this today on the live stream. If you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But essentially, this whole zone right here has my attention anywhere from the price point of 59.49 down here to about 59.18. Notice we are able to smash value low and the point of control from last week, which are levels that I talked about in Sunday's video, which is another reason you want to make sure you're subscribed to the channel. Now, if you like a way to support the channel at no additional cost to yourself, check out the 3 prop firms that I trade with: Apex Trader Funding, My Fund and Futures, and Take Profit Trader right now. you can get the best deal out there using the promo codes and the links down below. Now, as we come over and look at the 30-minute volume profile levels real quick, notice where the point of control is. And as we look at the volume profile shape, I would classify this as a P as in Paul. Now, what this signifies to me isn't necessarily bullish or bearish. It's more of a short covering type of pattern. And that's exactly what we saw today. Now, here's where it becomes bearish. Let's say tonight or tomorrow, we start breaking above value area high. Then we start coming back down. I then want to target the point of control. I then want to target this next high volume node at about 59.78. Then I want to target down here towards value area low. Anything below value area low, then I really want to start targeting that minus development area, the top of it at about 59.40, then all the way down here towards the bottom at about 59.06. Then if we really start breaking down below that area, we got to be honest with ourselves and say, you know what? Maybe this point of control down here will come back and get tested. However, if we start breaking above value area high and we can stay above value area high, then we are likely going to go higher from this point on. And then we have to come back over to the 4-hour chart. Now, ideally, I'd like to see a pullback off this chart. And if we pull our fib from the swing low right down here, up here to the swing high, anywhere between the 38, 50%, or 61.8 fib levels would be logical retracement levels. And if we look left, notice they come right within that minus development area, not only on the current weekly profile, but they'll also come into the minus development area from today's profile. Now, as we look at the volume profile levels, value area high is going to come in at 59.91.25. The point of control will come in at 59.87.75, with value area low coming in at 59.63.25. Now, as we come over and look at the volatility index, the VIX, look at that massive down candle we saw today. The VIX was actually down 13.85%. And you guys know what that means? That either tomorrow or the following day is likely going to be a down day in the market, just going by the VIX being down more than 10%. Anytime the VIX is down more than 10% or up more than 10%, we expect an adverse reaction over the next 1 to 2 days. Now, when we come over and look at the QQQs real quick, notice the MACD indicator on the daily chart still does not have a bullish cross. And now we're coming up to this potential resistance level. This declining trend line could be an area where we start to see a little bit of a reaction. And maybe, just maybe we'll see the Qs come down and start filling the gap. On the 4-hour chart, MACD indicator just barely nosed up here just a bit. But the problem is we have that large gaping gap right below us. On the 30-minute chart, MACD indicator looks like it wants to roll over. It looks a bit tired at this moment. Now, thankfully, we were able to come back and fill the gap over here. But in the wake of that, we left this massive gap from today. Now, one of the targets for tomorrow, if we do start to pull back, will be right down here at gap support at about 511.40, then potentially all the way down here, fill in the gap. Now, as we come over real quick and we look at the futures markets, look out here on the 4-hour chart, it looks very similar to the S&P. And if you notice, we basically came right back up towards this volume area of the composite profile. And you can also see we've had that A to B equals C to D pattern. I'll draw that out for you guys real quick, which the market already completed out here this morning. We almost made it all the way up to the 1.618. Now, what I'd like to see, if we're going to continue to push on up higher in this market, what I would prefer to see is see a retracement out here. And what I mean by this is measure this little swing low, this higher low, all the way up to today's high. Look for the market to retrace anywhere between the 38 and the 61.8 Fibonacci levels. Now, if we roll to play this out real quick and we just go ahead and assume we come down to the 50% level, that would give us a price completion at about 21,787. However, it's still a little bit too early to make that assumption, as tonight we could continue to go higher before the pullback actually gets underway. Coming over here and looking at the daily profiles real quick, we can see that we also have a P as in Paul shaped profile, but we also have this huge minus development area. Now, today in the live stream, I said I wasn't very optimistic that we come back down towards the point of control from this morning or this afternoon. However, tomorrow is a different beast. One of the areas I was watching, I said, even if we don't come down and test that level today, likely tomorrow or the following day, we're going to come back into this area. And the way I drew out this zone was the top of the minus development area, right down here to the prior day's high, right there where that candle body is. And to me, that makes a logical sense for where the market could pull back. If we grab our Fibonacci retracement, measure swing low to the swing high, that zone basically is right between the 50 and 61.8 Fibonacci retracement levels. And if the QQQs are going to be able to come all the way back, fill in their gap, Well, you know what? That would be enough to push the NASDAQ all the way back down here within this zone. Now, if we come over and look at Apple today was up almost 2% on the session. We look at Tesla, up 8% on the session, up 31 points, just a massive move up on Tesla. We take a look at Meta, which was down yesterday, was up a whopping 3.85%. But notice the wick on the top of this candle. We did not close at the very tippy top. We also take a look at Google. Google today closing in the upper third of the range. And for Google, we basically had this upper level move, then this upper level consolidation, which could lead to another leg higher in this market. And the question is, will we be able to come back towards those minus development areas first before we start to see stocks breaking out? Or is the market just going to continue to rally on up ahead? Now, if you guys would like to learn how to time your trades better using audio, make sure to watch this video right here.